Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 25th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis, and I do the same thing for you folks in these daily market commentaries. Also, I'm talking about option strategies that I implement into my portfolio based on the assumptions I come up with by looking at the charts, the economic data, and the geopolitical environment. All right, so for you folks, though, I've streamlined the process for you folks to be able to find the optimal option strategy for any given assumption. We aren't just picking option strategies out of the hat here. What we do is we follow this roadmap. If it's got high volatility, we take a right. If it's got low volatility, we take a left. So we start looking at narrowing down the best option strategy for our given assumption in and around that specific underlying we're talking about. So please check those webinars out at protraderstrategies.com. All right, so let's talk about the economic data. It's a Monday. We don't get a whole lot of economic data on Mondays, really, and we, for that fact, didn't get really any economic data here other than we did get China's CB leading index, and that came in at 1.2%, pretty much in line with expectations there. All right, that's about it. Now, crazy markets today, I'm telling you guys. I can't take my eyes off of some of these stocks that are just going crazy. So we're going to specifically drill down on that here in a moment. But let's talk about the overall markets right now. Crude oil futures pretty much unchanged on the day. Gold futures just slightly off, not being able to sustain or stay above that 1865-ish area. That's this line in the sand that we've been talking so much about right here, where I've gotten that support resistance. We settled below that on Friday. So, but you know, if you're looking for a silver lining, we did settle above the 200-day simple moving average. Having said all of that, we're kind of consolidating right around here. I was expecting us to move a little bit higher and kind of settle into a groove closer to 1900. We're about $50 off of that at this point in time, but I don't expect this market to really come off, especially they're talking about another round of stimulus that's printing money that should weaken the dollar, that should give these dollar-backed assets a little bit of upside momentum there. All right. The bonds up a point, migrating back towards that 170 handle. I think that we're probably more suited to be in the 170 handle, as a matter of fact, to the mid 170s, as that would show lower interest rates there. That would continue to help this economy get moving here. All right, we've got the VIX up almost 3 points on the day, a little bit off their highs. What's going on over in the equities? Well, we have a crazy day going on in the equities. Down 300 points here in the Dow Jones Industrial Average, starting to make that really toppy up there. As we can see, we created this topping pattern, confirmed it on Friday. Today, continuing to the downside. Now, NASDAQ, we didn't get really a confirmation on Friday or really any discernible pattern set up here at this point in time, but we could be looking at a bit of a pause here, maybe start to roll back over. It's hard to tell with the NASDAQ, whereas we're seeing with the E-mini S&Ps and the Dow Jones, we have confirmation of a top Friday today, continuing to the downside in those equities. And here we can see with the E-mini S&Ps overnight, where they were trying to make a move to the upside, but man, did we just fall flat on our face today. Just a lot of unabated selling coming into the equity markets. That's not true for all stocks, though. Well, Apple is off on the day, but I wanted to talk about Apple a little bit here. We can see, you know, we talk about a lot of these things in the daily market commentaries where we're talking about the volatility expansion, how to take advantage of that. Yes, we have pretty high volatility here because we have earnings just around the corner in this stock. And that's usually when we see volatility at its highest, and then volatility comes out after those earnings. Well, that's all well and good, but this also tells us that premiums are rather rich or rather expensive when we start seeing the implied volatility break out like this. All right, so having said that, Apple right here, right now, trading about $142. I'm looking at the February 25 puts in there. All right, what do you think those February 25 puts are trading in Apple right now? It's zero bid at 2. All right, zero bid at 2 cents. The 30 strike, those are trading zero bid at 10 cents. Zero bid at 10 cents for the 30s. All right, so let's take a look at what's going on over here at GameStop. OMG. Like literally, I've been watching this all morning. I haven't even been able to concentrate or watch anything else. Just watching this explosion in volatility from Friday to today. I mean, Friday we were pretty high anyway. Today, just ripping the cover off of the ball here on this rally. Now, like, we can even break this down a little bit further. Watch this volatility exploding. I haven't broken down the chart yet. But you can see this wild ride off of the morning open. We basically came into the day right around 200 in volatility. Well, that's usually pretty high nonetheless anyway. But we can see that that volatility exploded throughout the day, all the way up to about 4.8, 4.9, let's call it 4.8. But anyway, during that time, we're seeing this massive rally just ripping the cover off the ball to the upside here in GameStop. And, you know, this basically is the blockbuster right now, you guys. Kids are not really going into GameStop anymore to buy video games. They basically are downloading all of that stuff online, which means that there's no resale for those through a company like GameStop. That's not their infrastructure at this point. Yes, I do think that they did very well during the holiday season because why? They got a bunch of Xboxes and PS5s, all right? So I think they got like 5 of each of those or something. And people went and waited in line to GameStop, bought these consoles. That was great for their sales on, I think it was Black Friday. Also, probably got some people to buy some other things while they were in the store. So they did very well through that time. I think they knocked it out of the park, or at least beat the street estimates on their earnings. But this market going from, 2 weeks ago from $10 or even $2 a couple months ago to $159. This is valued at one point in time higher than what we were seeing for Apple, right? I mean, GameStop, people. Folks, this is crazy. So anyway, with that being said, I was watching and looking at selling these February 25 puts in GameStop. Same strike, right? We're talking about same strike apple to apples with Apple. And the market trading up and around that level. Well, I was able to sell these February because of the extreme high volatility. February 25 puts in there. As a matter of fact, I think I sold it for $2.57. I can't remember right offhand. I was playing around with those pricing. Let's see, where did I get those off at? $2.57. But I was all over the place with this. When this market was trading right around here at about 125, 130, I think we were starting to make, it was probably around 130. I was looking at selling these same 25 puts. So basically, we're probably trading right around in this area with the volatility, okay? So I was looking at selling those 25 puts in there when we were trading right around, I think it was 130, 140-ish anyway. And then that volatility even exploded further. We saw this market go from I was watching it go from 130 to 160, where we can see this high is. That volatility exploding. Those same puts that I was looking to sell originally. I was originally looking to sell these February 25 puts. I think it was trading for around $1.30. All right. This volatility exploded as the market was moving higher. This market moved $20, $30 higher, and those puts increased in value by over $1 during that time. So rarely, I want to just make this example because rarely do we see this volatility really explode and a directional move like this, just parabolic move and that volatility increasing. We actually see those puts way down there at the 25 strike increased by $1 full. So I took advantage of that and I was able to sell them for $2.57. I couldn't help myself. I had to do something there. I don't care if it goes down there to 25. Feel free at this point. I don't care. I do think it is well overdone. I was looking at trying to sell some calls in there. I was looking to short some calls, but the market was moving so fast to the upside. They don't even have the calls like listed on my platform at TD Ameritrade because it's moving so fast. They had them ready to go when we were trading around 70, but once it flipped up above 100, there weren't too many strikes there. As a matter of fact, the highest strike I saw at any given time was when this massive market was rallying was 115. Now there's some stocks in there. As a matter of fact, I'm going to jump in there here pretty shortly, and I'm going to go in there and sell some calls now that they've got all the way up to now the 150 calls in there, but it was ripping so fast they weren't releasing the calls quick enough as we were getting up there, because I would have much rather taken advantage of a short call in something like GameStop than necessarily selling these puts down there at the 120 or at the 25 strike. But I just wanted to take advantage of that volatility while I had the opportunity. And with that, the market has come off a little bit. The volatility's come off, and my puts are starting to look a lot better. All right, so, and I could continue to see this market slide back down to 50 or so. If that volatility comes out, then I will be directionally wrong, but I'm really playing this volatility play here in GameStop. So that's all I've done today, playing around with that. I can't take my eyes off of it. I am looking to try and sell some covered calls in my IBM. Remember, I have a long trade in there. I've been lowering my overall cost basis in that. So I was looking to try and sell the 125 calls in there to do some covered calls for about 95 cents. Market's kind of moved away from that, and it's about 20 cents away at this point. I'm not going to chase it. I'm just going to keep my eye on it. Maybe try and find some short calls to sell here in GameStop. That's just too juicy not to take advantage of. All right, that's all I've got for you guys. Other than take a moment to go over our disclaimer, as we're an educational company, you guys. We are not trying to get you limiting off the cliff with us here. We are an educational company, so please know your risks for getting involved before getting involved in trading options and or stock for that matter. All right, so that's all I got for you. Other than if you can't take that, take it easy.